Very good afternoon, everyone. Welcome to today's uLaw webinar. Now, today's webinar is accredited for 1 hour of professional CPD credits in the provinces of Ontario, New Brunswick, and British Columbia. So for legal professionals joining us from these 3 provinces, kindly do log in into your individual portals, websites, and kindly use the title of today's webinar as Trust and General Reconciliation Demystified. So that's the title or the name of the webinar that you would enter to claim the 1 hour of CPD credits. Again, confirming that today's webinar is accredited for 1 hour of professional CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. So we look forward to having a great webinar, and kindly do use the chat window to ask any questions that you may have at any given time during this webinar. We do have our support staff on call and would be more than happy to answer any questions specific to today's webinar. It would be great if you can ask those questions related to today's webinar. Okay, so today's webinar, the title is Trust and General Reconciliation Demystified. Okay? Like every other uLaw webinar, today's webinar has a specific agenda. We're going to talk about what this reconciliation process is all about, or process is about. If you're dealing with both the trust account as well as the general account, let's take a brief moment of understanding these reconciliation reports, the different data points that the legal or the law societies across Canada expect you to present through this reconciliation process and the documentation, and how reconciliation actually helps you as a business owner as well to really lock down the numbers, the important numbers for both trust and general, so that generating the appropriate ledgers would be easy and straightforward. And we'll also look at how these important steps help towards becoming a more audit-ready business professional, legal professional, and how these are important steps that have to be taken as you progress towards that path of being ready for your audit. Okay, so we'll walk through and we'll share website information about documents that you have today that outline this checklist of things that you're expected to bring to the table for that audit. And of course, we will pause the screen for a few minutes, or if you want to send us an email, we're happy to share those links with you as well. And finally, we'll talk about the important aspects of this financial management process for being audit ready. How can you be ready from the get-go by having important process or disciplined steps that you can take within your business to ensure that you're very proactively working towards being audit ready. And we'll spend the last 5 to 10 minutes just using uLawPractice as an example of legal accounting practice management software and how you would go through this process on a day-to-day basis and be prepared for that monthly audit, okay, or rather the monthly reconciliation process. Now, prior to just getting into the reconciliation process, let's just again throw a quick light into the different types of accounting systems that we've evolved over time to being used. So starting with the manual double entry to the OneWrite to even the spreadsheet software that we currently see in the market of individuals just pretty much documenting in an Excel sheet or a spreadsheet software of the work that's being done, to evolving to using general accounting software such as QuickBooks, to evolving to now the marketplace having the legal accounting software that was purpose-built for accounting principles that legal professionals have to undertake, especially with regards to trust in general. Totally designed for the accounting aspects and the different ledgers and journals that you're expected to produce, both from a trust accounting and general accounting perspective, ensuring that calculations and data entry are more fine-tuned so that the ledgers and subledgers, if possible, are automatically posted so you don't have to do them. And of course, generating those end reports that you are expected to produce as part of your audit or as part of you staying compliant on a monthly basis, generating the reconciliation document along with the ledger documents. Okay, so that really, a combination of that gives you the accounting process and the accounting documents and the financial documents that are part of an audit. Of course, as part of an audit, you have other important compliance documents that could be file-related or client-related or just the overall legal process related. But if one of the more important set of documents that I'm sure you appreciate are the financial set of information that are covered and discovered as part of the reconciliation document, as well as the ledgers and journals that follow that. Okay? Okay. So what is the reconciliation of the trust account and what does it take to accomplish it? Now, prior to specifically talking about the trust in general, from a reconciliation standpoint, we want you to kind of think about it as a process, as a very organic step that you would have to take to ensure that the numbers between your bookkeeping system, whether that's a software system or if it's a manual system, spreadsheet system, whatever that system may be, that you are able to reconcile or ensure that there's a balance to the numbers and a reasoning towards an imbalance, if there is, between this bookkeeping software where you record things that happen in your legal life as well as your business life, comparing it with the bank statement where all these transactions, unless they're cash-based, most of the transactions that have a way of tracking them, of course, those transactions are embedded in your bank statements. So the Law Society would like for you as the legal professional to ensure that you're doing the right thing, especially with regards to trust. They want to ensure that there's no misappropriation of financials or funds, especially when it's dealt under the umbrella of the trust account. So reconciling the trust account is going to give them the confidence about you as a legal professional running your business in the right Law Society compliant manner that, of course, embraces the ethics and the etiquettes of being a legal professional in this society. And it's truly a way of ensuring that the numbers that you see in the bank statement match with the numbers that you have recorded for yourself in your bookkeeping system. And sometimes there could be a mismatch where there could be an additional deposit in the bank where it does not reflect in your system, or maybe there's some additional numbers in your system and hasn't reflected yet in the bank. And there could be reasons for it. Now, the reconciliation document allows you to capture those meaningful reasons as well that go towards helping you define that balance between these two systems. So if you're, for whatever reason, if there's a bank error, right? For example, sometimes when you just get started, when you start an account with a bank, unless you have indicated to them clearly, we've often heard of stories where banks may withdraw a bank fee straight out of your trust account. Now, of course, that's not the right compliant way to deal with it. Technically, they would have had to, take their bank fees out of your general account, right, instead of touching your trust. But if it does happen and you're reconciling, of course, the bank for your trust account is going to be, let's say the bank fee was $10, the bank statement is going to be $10 lesser than what you have recorded in your bookkeeping system if, let's say, you have not accounted for that bank fee to be taken out of your trust account, right? In which manner you're going to generate a reconciliation report for the end of the month indicating that because of that bank error is why the bank statement is $10 lesser than what I show in my bookkeeping system. Okay? So reconciliation is the process truly and gives you the opportunity as a legal professional to outline to the auditors, outline to the Law Society that you're very much on top of every transaction that happens in your legal business, and you're ensuring through this process and telling them through this process and the documents that come out of it that you can be rest assured of you staying compliant and within the boundaries of the compliance. Okay? Now specifically if you look at the trust reconciliation process, of course there is still an accounting procedure that demonstrates that your record keeping are accurate. And we've broken it down into 4 important steps or data points that are required to be captured as part of this reconciliation, trust reconciliation document. If you look at step 1, we're talking about recording of the bank statement and the balances. Very important is that basically you're doing this bank reconciliation as of end of a certain last day of a month or maybe a few days earlier towards the end of that particular month. This document, of course, was taken out of the bookkeeping guidelines, so ignore the date, but take the essence out of this document. This is a reconciliation document, let's assume, for the end of August. It contains the balance per the bank statement. So as of August 31st, your bank, of course, is going to tell you what is the balance in that account, in that trust account, as of that date, right? And then you're going to capture, as part of step 2, recording of any outstanding checks and deposits and bank errors, if any. So if there are any anomalies between, let's say, the bank as well as the bookkeeping system, this is where you're going to highlight those. Outstanding checks, any outstanding deposits. So either you have yet to deposit a check or a check that you have written is yet to be transacted out of your account. Okay, so it's one of these two. Or if there's a bank error, of course, you're going to account for that as well. Okay, so step 1 is the bank balance. Step 2 is really recording all the outstanding checks and deposits. Step 3 is recording of all your client's trust listing. So this is individually listing out every client who has provided a retainer or there's money in the bank in the trust account pertaining to that client, along with the last activity date and the outstanding amount or balance amount for the trust balance for that particular client. Now keep in mind, a total of the individual client's trust listing is what adds up to be the balance, of course, in your trust account. So the $1,700 here is what is the bank balance as of August 31st, and that's how it's all added up. So you know there's $1,700 in my bank, in my trust account as a balance. The trust listing is truly a way of breaking it down into subcomponents and clearly indicating as to the different clients and the different balances in their individual accounts that all add up to the overall balance. Okay? And last but not the least, the step 4 is your way of comparing, or what it's called as a trust comparison between the total unexpended balance as per your client's trust ledger. So this is your bookkeeping software's balance with the total reconciled trust bank balance. So you're basically comparing the balance as per your client's trust ledger in your bookkeeping system and comparing it with the actual bank balance. Okay? If you really look at it, there's about $40,000, $933, reduced by the outstanding checks and the outstanding deposits that all add up plus a bank error that occurred on the 12th. Okay, so this was cleared, and you also got a sub-ledger of $9. And that adds up, and then 40,000 minus the additions of these is what gives you the 1,700 balance. The four important data components: the bank statement balance, whether it's, and again, this is something that's fairly simple in today's context, where you do have the capacity or the capability, depending on the institution that you bank with, to be able to download these bank statements right online. So you can log in a secure manner into your bank account and essentially go into your trust account and choose month and date and effectively download either a PDF or a CSV file of that particular bank account. Step 2, recording the outstanding checks and deposits, any bank errors, if any, that have occurred in that particular time period. Step 3, or the data component, is the entire set of client's trust listing that adds up to that total balance of that trust account for that month or for that date range. And the final trust comparison between what the balance in the bank as well as the balance in your client's trust ledger, which is captured or should technically be captured within your bookkeeping system. Okay? Now, in contrast, of course, there's a general reconciliation that needs to be done. Of course, there's often a question that occurs. There's two questions. One is, I do not have a trust account. Well, if you do not have a trust account, you're not required to generate a trust reconciliation report. You just have to deal with the general reconciliation report that you have to generate. Now, the other question we're often asked is, I do have a trust account, right? But I did not have any transactions that happened in that date range. So I just started my business, and it's now June 2019. I haven't had any retainers coming in, I have not utilized that vehicle. I've predominantly done general transactions, in which case, what we recommend is to still generate what we call a zero balance trust reconciliation report. Just clearly stating that, yes, it's all zeros. There is no money coming in, no money leaving the trust account, and hence my balance is zero. That's exactly what your bank would indicate too. So we would still recommend that you generate what we call a zero balance trust reconciliation report. If you do have a trust account, I know it's an extra step. It seems minimalistic, but it's an effective way of continuing to stay and be compliant and have the process ready. Okay. Now, coming into the general reconciliation, it's pretty much the same process. In which case, in this, it's a different account, of course, right? It's a general account, and you could technically have more than one general account in your business. So you could have a operating account, you could have a general business credit card, right, that you may be using for your business. So again, these are accounts that are, again, pertaining to your business. These are not accounts that are pertaining to your personal life. So you may be a legal professional, but you're running a legal business. The general account is for your legal business only. Okay? Very similar in nature to the trust account. It's also it's an accounting procedure that demonstrates that your record keeping are accurate for that specific account or set of accounts. Of course, if you do have multiple general accounts, you are required to generate multiple general reconciliation reports for those individual accounts. Right? Makes sense? The one difference, an important difference at it, is the number of data points that are captured, or the number of steps that you need to do it. If you're doing this manually, are one step lesser for the general account. So you only have 3 steps to deal with when you're dealing with a general reconciliation document. Step 1 is still the recording of the bank statement and the balances. So that remains to be the same. You're basically capturing what is the bank balance in your general account as per your bank as of that particular date, the same August 30th, 31st, if I were to consider it. The second data capture are any outstanding checks and deposits, very similar to the general account, the trust account that we had. Step 3 is if there are any bank, and then the comparison between the bank and the ledger itself, basically similar to the trust account. The one step that's missing is the listing or the client's trust listing. So that's the only step that's missing in the general account that is not really required, but it is important in the trust account reconciliation, but not so much important in your general reconciliation. So you're still capturing the bank balance, you're still capturing the outstanding checks and deposits, and then comparing the bank statement balance with your client's general ledger balance, maintained again in your bookkeeping system. The one thing that you do not have to capture in your general reconciliation is the client's trust listing. Okay? Okay. Now, what are the important data points that you have to provide before you generate this reconciliation report, whether that's trust or if that's general, right? First step is ensuring that you've captured the date. So it's the end of a certain time period. We have, traditionally, it's expected that you do it at least once a month, and we highly educate and recommend that if you can do this more on a weekly basis, but generate just one document if that's easier maintenance of just one reconciliation report a month. Keeps it easier. It's 12 documents a year. Multiplied by the number of years that you've been in business, it's easier to maintain, manage, etc. But staying on top of these transactions is something that you can do on a daily, if not a weekly basis too, right? But it's important that you're indicating that this reconciliation report is as of the end of this particular date. So data reconciliation is an important aspect that you first capture. Second, of course, is you have to understand and know the bank balances. Before you do your trust reconciliation, kindly do log in into your bank, download as of this date and what is the bank balance. You do have to know that, so you do have to go out of your bookkeeping system to know that information. This could be based on paper, could be based on online statements, does not matter. And the third step that you have to do before you generate this report is, again, just compare transactions between your bookkeeping system and the bank. So what does that mean? So let's say on the first of that month, you received a retainer, right, from a client. It's for $565. As soon as you've got it, of course, you've got to tell your bookkeeping system, because you got to consider your bookkeeping system as your friend or your assistant to whom you can also download all that data that's in your brain, right? When something happens in your legal life, when a transaction occurs, I always say this, there's a few places that does record it. One is yourself. Your brain recognizes that this check of $565 is in your hand, so that knows it. Now, once you deposit it into your bank, of course, your bank knows that. Of course, your client knows it, and that's why you need to sign the retainer letter and a receipt. But to tell the law society, and once the next retainer happens, then your memory is still not great about that first transaction, and that is why a bookkeeping system helps you to download those transactional details as and when they happen, immediately, right? You've got that $565, you deposit it into the bank, and hence the bank is going to say that there was $565 on the first of that month. But unless you tell the system that that $565 was deposited in the bank, or you've received that $565, those two different systems are going to be off. So once you do inform the bookkeeping system, enter that data, that for that particular client, for that particular matter, that $565 was accepted as a retainer based on the type of payment, the check number, or if this is electronic, you can mention the date, the particular, any receipt number that you have, right? so that when you're comparing at the end of the month, as it starts from the first day of the month, it clearly tells you, right, that on the first, I got that 565. I see it in my bookkeeping system. Oh, fantastic. I also see that happen as a deposit in my bank statement. Now, once you've generated an invoice, so this is money coming into your trust account, okay? Likewise, you're also going to capture transactions as they leave your trust account. So let's assume you've continued to forward with that matter, you've completed that matter, you've now generated an invoice, and you've done a trust transfer, which is very important. Unless you do a trust transfer, that money is not going to be yours. The revenue is not going to be recognized by your business. And hence, once you generate that invoice, important to move that money from the trust account into your general account. And when that happens, of course, in the bank, if you've done it electronically, it's automatically going to capture that. If you're going to write yourself a check, it still is going to capture that transaction in the bank. But you need to indicate the bookkeeping system that you do intend to move the money from the trust to general. So till you do that, again, the bank is going to have lesser money, and the bookkeeping system is going to show that 565 still resides in your trust account. And hence, it's important that you also tell the bookkeeping system when money is leaving a certain account. And if you do that, you know that the bank and your bookkeeping system are balanced, because you received 565 after 10 days. You took that 565 and moved it into your general. The 565 came in on the 1st into your trust account. 565 left your trust account on the 10th. Both your bank as well as your bookkeeping system are going to say the same thing. Now, that's exactly what we're trying to do with step 3. If for whatever reason, so this is exactly the best way that you can capture any mismatch in data entry, right? Maybe you forgot to tell the bookkeeping system about that transaction. This is when you reconcile is when it's best to catch it. Instead of waiting till the end of the month, like the end of the month, you could even plan to do it, as I said, on a weekly basis, or even maybe on the 25th, 26th of a month. But these are important 3 steps that you take prior to generating that reconciliation report. And we want to break down this whole reconciliation process. Of course, there's a huge stigma around it. It is often perceived as a very convoluted process, but it shouldn't be, and it's a fairly simple process as long as you have done the right things to capture data and you've devised a disciplined process within your firm, especially if there are multiple individuals involved, then of course that adds to the convolution. But if it's just yourself, you should just find a way that you can capture the moment and inform your bookkeeping system of those transactions. Okay? Those little steps adds up to you being audit-proof right from day one. Makes that reconciliation process fairly simple as well. But the reconciliation step itself was defined or designed to catch 2 fundamental issues. It captures that all transactions that you have in your accounting system that do not match with your bank records, as we earlier just mentioned. So this is a great step that indicates to you, purely based on the numbers, if there are any mismatches between your accounting or bookkeeping system and your bank record. It also catches all the bank transactions that you have forgotten to enter into the accounting system. These are 2 fundamental important issues that are very pragmatic, something that happens every day, that this reconciliation step was meant and designed to capture. If I were to go one step further, it also allows you to capture important steps such as bank errors. Okay. Instead of doing the reconciliation, let's say on July 1st for the month of June, we would rather recommend you do it at the end of the month, June itself. Because if there is a bank error on the 31st and you're unable to reverse it in time, you, of course, have to carry that bank error and mention that as part of your reconciliation process. Okay? So rather catch it early enough in the month that even if there is an error in your trust account as a bank error, you can always go back to your bank and ask them to deposit that $6 or $10 back into your trust account and remove that bank fees from your general account. And if you have reconciled your trust and general accounts on a month-on-month basis, let's talk about the positives. What does that mean? It means that your accounting system is up to date. You're basically, because it matches with the bank, it's a way of understanding that you have technically entered all the data in time. It's ready for audit. Okay, the audit may happen, either it's a spot audit. It happens, of course, within the first 18 months of any new legal practitioner's life. But you can be ready from it from the first month, the second month itself. And it's all a cascaded effect of a disciplined effort to begin with. Let's take it one step further. If you've done your general reconciliation, trust reconciliation, then you're very confident about the revenue in the bank account. And what that means is that you can be ready and confident of filing the taxes for your CRA. Okay, because that's based on revenue, right? Revenue, expense, and of course on overall profit. But of course, a fundamental equation to that is the revenue. Sometimes there could be money sitting in the bank and you still not made it. For example, we have, of course, heard stories about a lot of trust, a lot of retainers, but then once you generate invoices, individuals forget just because of day-to-day progress and, other things come into life, life gets in the way, and then they fail to tell the bookkeeping system that they actually moved money, or even worse, forgot to move that money from trust to general in real life. So if you have not done that, you have not captured the revenue for that transaction in that month, technically, right? So let's say in June you got $565, or let's say you got it in May. If you've not transferred that money in May itself, that revenue was not recognized for the month of May. And hence that cascades to the HST, it cascades to that month revenue or the profit and loss, and all adds up towards the appropriate taxes that you're otherwise required to pay. So that's why reconciliation is setting you up for success, even to help you with filing your taxes. It gives you analytics about the data itself. So if you really want to know what was my revenue in the month of May, and if you've done your reconciliation, it's going to tell you, ensure that you've done all the transfers right, it's going to tell you the right numbers. And of course, there's that peace of mind, which is priceless, because you know from the get-go that you've prepared yourself for this, no matter where you are in your legal business, whether you're just starting off, whether you're a seasoned campaigner. And there are multiple ways of accomplishing this. You could have external help. You could have bookkeepers or accountants. For sole practitioners for whom can't afford it, you want to purchase and invest in the right legal accounting tools that can give you right from the get-go. Okay? So it's either you have time and money or you don't have one of these. So depending on your individual situation, you're going to invest in the right tools or the right help to accomplish this. So is it truly true that you are audit ready once your reconciliation is complete? And we believe it's an absolute yes. Because if you've completed both your trust and general reconciliation, then all of the audit requirement documents just become a breeze to generate. Right? So as part of those compliance set of documents that are expected by the Law Society, what they want out of you is the trust ledger, the general ledger, and they want the 4 journals, the trust receipt, trust payments, general receipt, and the general disbursements. And jurisdictional documents may also differ based on the province. For example, you may have a Form 9A in the province of Ontario. In other provinces, you may not have that. Depending on the area of practice, you may have intramatter trust transfer documents that indicate, especially if you're dealing with, let's say, real estate. Whereas if you're not dealing with that, you may not even need to do that. fee book and expense book are important because the fee book captures the revenue, and the expense book captures the expenses that you have incurred as a business, and that's fundamentally important for the Law Society to capture as well. And then the basis to make these numbers realistic and solid, the basis and the fundamental is the trust and the general reconciliation document. So it's almost a bottom-up approach where you start with the reconciliation and then you move up the chain to generate all these documents. Okay, so that's why we believe once you have the reconciliation complete, you most certainly are ready to generate these ledgers and journals and make it almost a package, if you will, combining with the reconciliation report along with the monthly ledgers and journals almost makes it a package. And that's what you have to work towards. Spend, hours instead of days in generating those. Now, this is taken out of the bookkeeping guidelines or the checklist provided by different provinces. Of course, this is available to uLaw users. If not, you can certainly download this in a different template as provided by the individual jurisdictional bookkeeping guidelines as well. And of course, this gives you an idea. So if you're going to invest in the right tools and in the right process and the right help, depending again on your situation, if time is money, you're essentially going to save yourself time. Keep in mind that it's certainly a double entry system. So of course, you need to ensure that you've captured the data as and when it happens. And many times it's the same set of pieces of information that's captured. Predominantly what changes are the client and the matter themselves. If you're doing this in a manual way, it could lead to manual errors. So trying to invest in the right tools, the software, because in today's day and age, that does help. For a minimal amount, it certainly is a great value to your business. So do explore, discuss, get feedback, references from friends and colleagues to invest in the right tool to automate some of these mundane tasks. Okay, and then a legal accounting software, of course, makes life easier because it was purpose-built to ensure the compliance and you're capturing the right data with regards to your legal business. Okay. Okay, so we've spoken about that. Now, these are important reference points for you to consider. You can Google them, or you could even take a note of some of these. Of course, the websites have changed to the effect where if you do type LSUC, you would get LSO because the name's changed. But you can certainly download or Google them as bookkeeping guidelines, depending on the province that you're from. And you would certainly get these documents. These documents outline the importance and the important data elements and the reports that are expected out of you as a legal professional to produce on a monthly basis or when asked for during an audit process. Okay? And the frequently asked questions is also a great document that also talks about, the misconceptions of these audits. Because many times, of course, it's important. They're very, very strict with regards to numbers, with regards to the trust account. But it's not, it also has this very subliminal purpose of ensuring that you're successful. And that's important if you look at it from that vein, that this was meant to safeguard your business, safeguard you as a compliant legal professional in this highly reputed legal industry, right? So I want to now move away from my slides and take you through just a simple process of what this really means in the pragmatic sense of using a system to do this. And we'll look at a few different situations as we go along, how you generate the trust and general reconciliation documents and the ledgers, etc. And For those who are not aware of who we are, we're a Canadian company. We're a legal accounting, practice management, and a business accounting software all built in one. Compliance is really at the heart of the product, and we do offer all of our prospective customers a 30-day trial for you to try us out with no obligation to really explore what that uLaw experience could mean for your business. So do take the time, visit us on our website, and if it makes sense, please do sign up for a trial. Now, I'm logged into my fictitious legal professional's uLaw account called uLawPractice, or Roger Moore, and I use this account for a lot of my business, for my presentations, for some of the many demos that I conduct. For the purposes of today's context of the webinar, which is about reconciliation, I'll draw your attention to, we have a section called the accounts, which pretty much is a combination of your law society accounting principles as well as your business accounting, and which is equally important because when you look at your general account, it is a combination of transactions that are related to your matters as well as transactions possibly related to your office expenses, right? Which is not something regularly important from a client matter perspective. More a business accounting related more to your office expenses. But those numbers are important because they're captured across the same general ledger and journal. And they're also important for you to manage your HST or jurisdictional taxes if you have one, okay? So as you notice, we have a compliance panel across all of our screens that captures the compliance nature of these individual business functions. If I were under my file management or my matters, of course, we have a compliance under that as well. These are important compliance documents that are important for your audit as well. But the purpose of these documents are different. They're not financial record-keeping documents. These are important documents to ensure that you've done the right steps in engaging this client and this customer, and you're doing the right steps to manage the file in itself, such as have you generated a verification document, an intake document? Have you done a conflict screening to, of course, take care of your own interest? Things of that nature. But for purposes of today's webinar, when you talk about reconciliation, that is most certainly a financial document, and it's under our account section. Now today, for real estate lawyers who use uLaw, and for others who do have multiple trust accounts, you are able to reconcile multiple trust accounts. A very important step based on a feedback that we received from a law society auditor that instead of it having been a mixed trust account reconciliation report, that they always prefer individual reconciliation reports for each trust account. Now, many small legal firms may end up just having one pooled or mixed trust account. But depending on the style of business, like for example, if you do have a real estate business, you may have a separate trust account for other transactions, right? So you may have a separate trust account just for your TerraView. So if that is the case, today uLaw supports that as well. So again, staying in line with being compliant with the bookkeeping guidelines of the Law Society. So let me take a step back real quick. I'm going to click on the compliance and kind of just walk you through what's expected. Now, let me just show you what the trust reconciliation step looks like. Before you generate that reconciliation statement, as I mentioned, we entered the date. So today's date is the 14th of June. But if I were to go back and choose the 30th of April, and let's see if there are any transactions that are outstanding. And of course there are. There are 5 different transactions that have not yet been reconciled for the month of April. Now, technically what you can do is you can carry this forward. You can either logically close them for the month of April. If these are the only transactions in April and you've not previously generated an April reconciliation, then you can do that, which almost seems to be the case because it starts from the 1st. Or you could carry them forward into the next month and make them as part of your May reconciliation report, depending on the situation. If you did your April reconciliation on the 28th, and you had some transactions coming in on the 29th, 30th for April, you can carry them forward into the May reconciliation. Our recommendation is always, as much as possible, have a logical closure across each and every individual month. Okay? So let's assume the former, which is assuming that these are the only 5 transactions of any trust-related transactions that occurred in your legal business for this month. You would, of course, have now your bank statement open for the month ending April 30th. Right? So I would log into my TD, RBC, CIBC, Scotiabank, whatever is your financial institution that you deal with, credit union banks, and choose the bank statement. Typically what you should expect is 1, 2, 3, 4, 5. There are 5 different transactions. There are 2 deposits, or in fact 3 deposits, and there are 2 withdrawals. So there are 3 instances or transactions in which money came into the trust account, and there are 2 instances of transactions when money left the trust account. Ideally, you should see the same set of 5 transactions in your bank statement as well. If you remember what we looked at in the 3 steps, one was the date. The next that from a reconciliation standpoint, what's required is entering the balance as per the bank statement. So what was the balance in that bank statement? Okay. So that was the bank balance. Then comparing these transactions. So first, on the 1st of April, as per what you've captured in the bookkeeping system, there was a retainer for Mr. Darren Singer of $500. Now you can click on this bank date because sometimes you may have got it on the 1st, and inform the bookkeeping system right away, but maybe you did not deposit in the bank right away because you do have 24 hours to deposit a retainer. You went to the next day, and maybe the bank took a day additional, so you can change this date as per what the bank says. So maybe it's on the 2nd is when it's reflected in the bank. 1st is when you captured it and entered it into your bookkeeping system. So as long as it's well covered within the month of April, you're totally fine. If the dates remain to be the same, so this is the 20th of April, this is the 20th of April as well, as long as the date remain to be the same, that's okay. You can just leave them empty, leave them the same. You had 226 coming out on the 20th. On the 29th, you had another $200 for another client, for Jonathan Bibber. And there was a $5,000 retainer, and you removed that $5,200. So the $5,000 plus the $200 that you received was taken out of in a single transaction. Okay, so now let's add the balance 38. Now once these 2 bank balances match based on the transactions that you've been covered, automatically you have the opportunity to generate the reconciliation report. Okay, so once it's highlighted in blue, you pretty much know that it's ready to generate. Now if I choose the April 30th as the cutoff date in my reconciliation process, you're going to notice that this is blank, that those 5 transactions have already been accounted for and have now been reconciled, and hence are not yet required to be reconciled any further. So now you move forward to the next month, so which is the month of May. Now, once you choose the end of May, you're going to see these transactions. There are about 16 transactions that you are you've captured in the month of May, and hopefully they're the same transactions. Let's open up the trust reconciliation report. And if you remember the 4 steps, we had the first step, which was the balance as per the bank statement, minus any outstanding withdrawals, or plus any outstanding deposits that you've yet to deposit into the bank, any bank errors. So none of this really happened, okay? uLaw provides you one additional step, which is really not required, but we give you an extra sense of purpose in terms of the different transactions that you had cleared or reconciled as part of this particular month's transaction or reconciliation. So you know what went behind doing that, right? And then the third step was, so we say there's about $383,000 of bank balance in this trust account. Mind you, this is a playground account. But how did you get that balance? Who are all the clients whose retainer or whose trust balance have all added up to that balance, right? So you've got all these different clients. In fact, we even mark them in different colors. So if we know that there are certain transactions that where the last activity date is 2015, and the Law Society does recommend that if certain transactions are beyond a certain date range, that it's your obligation to reach out to these clients and either have a closure. So for example, if Ryan, you've got 554, maybe it's an ongoing case, could be a criminal matter and it's just going on and on forever, which is fine, then you explain yourself. But for Toby, if there's 789 and this, for whatever reason, you've not been able to complete this matter, then it's your obligation to actually just close this file and, depending on the situation, either pay yourself or give that retainer refund back to the client. Okay? And the fourth step, as we captured, is the comparison between the reconciled trust bank and the trust ledger. And you would sign this, and that's what makes this part of the trust account reconciliation for the month as ending on the 30th of April 2019. Okay, so this is what goes behind the reconciliation process. Okay, so let's quickly complete the May month as well. And why we do this individually is because it's important that you take individual care at looking at each and every transaction and ensure that those transactions have occurred. Okay? Now you can define how many pieces of information you want in each screen. We've set it up to 15, and hence each page has 15 transactions. You can even have 20. Okay, so I've done that for the month of May as well. Now, let's move on to the general reconciliation. Same process. So for the month of June, I have no transactions. So for whatever reason, I've been up to date with all my transactions and reconciling my general accounts, which is fantastic. So if I were to look at June, ending today, I find no transactions. So let's take a simplistic example. So let's say I add in a manual way, I could import this as a bank statement, but for purposes of today's time, I'm just going to go ahead and add a office expense. I'm going to say, earlier this week, I had purchased paper for my printer, and it was $100 including tax. I paid this to Staples, and I paid this out of my general account. Maybe it was a debit card transaction. Okay. Don't have a reference number, you can just say the date. It makes it easier for your reconciliation. So this is a typical transaction that you've now captured into this bookkeeping software uLaw as and when it happened. Of course, your general statement in your bank, because you used a debit card, that $100 would now be withdrawn or taken out of your general account in your bank, right? So if you used a TD bank account and you swiped it into Staples, that $100 has now been paid to Staples. So you would see a credit from your perspective, money being taken out. Or let's call it between deposit and withdrawal, it's a $100 withdrawal in real life too in the bank. Now if I were to do my reconciliation, okay, so let's say I want to do my general reconciliation like today. You see that one transaction that you had captured shows up. It shows up for your approval. And this is where you're going to compare it between the system that has captured this one transaction and captured and compare it with the bank. And if let's say this is the only transaction for whatever reason, if this is the only transaction in this particular month that you're dealing with, then that's all there is. Now, the general reconciliation, as I mentioned earlier, is not just about your office expenses. It's also about your client-related or disbursement expenses as well. Okay, provided you're using the same general account. So let me we'll just have to choose a quick file just to show you what I mean by that. Let me just jump into Brown versus Chang as a matter. So this is money leaving the general account for expenses or disbursements, or it could be money coming into general account when you're getting paid, either through an invoice or if you're doing a trust transfer from trust to general. Okay, so if I'm actually paying a retainer, let's see, a disbursement, I've got a general disbursement, I've got it today, application fee, $100, and let's say it's tax exempt, $100 coming out of, let's make this interesting, let's say $200. So that's $200 coming out of coming out of the same general account. Let's say I wrote a check. So $100 coming out of your Staples for your office expense. Now $200 has just left your general account for a disbursement. The only difference is that, of course, this is a recoverable expense, right? Technically, what you should do now is generate an invoice and ask the payment from your client, saying, hey, I just paid $200 on your behalf. Thank you very much, sir, but I'd like that money back. Pay me those $200 as per our engagement or retainer letter, right? Ideally. But until you've done that, it will still show as money having, of course, left. You would not show the money coming in because you're not going to get paid. So now if I go into my general reconciliation, and this is pretty much the same thing for trust as well. As and when transactions occur that touch those trust accounts, you're going to see them reflect when you generate your reconciliation. So now if I'm going to, all right, I'm going to do my compliance, and I'm going to do my general reconciliation process. Now you see two transactions of withdrawals. The $100 for the paper that was purchased and $200 for the application fee specific to the client. So anytime you see a file number, you know it's specific to a client. So this is how those transactions add up for your approval and for your blessing so that you can compare it with the bank statement and confidently tell the Law Society that the transactions between my bookkeeping system as I captured them and the transactions that I've reflected in my bank as they've happened match. If I do actually go and generate this invoice, of course there was a $1,600 trust balance that was still there, so there's still a retainer sitting in this particular account. So of course I'll generate the invoice. I would have to do the trust transfer, move the money, the eligible money from trust to general, right? And we indicate that too. If you hit the question mark, you know exactly how much the client owes you too, okay? And with purpose of time, now once you have generated, so let's say we have done the trust reconciliation for April and May, now you can feel confident to generate those ledgers and journals that are important as part of those packages for your audit readiness, right? So if I click my client's trust, I could say for the month, I could choose the month particular date range. So what we've seen is as long as you're doing your monthly reconciliation, you can always go back in uLaw and be confident of generating these documents almost when you need it. You don't even have to do it on a monthly basis. What you certainly have to do is the monthly reconciliation, and if you're confident about that, then you can always go back in time and generate these documents because they are set in stone unless you've changed something. If you've agreed upon that those 5 transactions occurred in April, those are the 5 transactions that we showcase as part of this ledger. Okay, so here is your trust amount client's ledger for the month of April. Likewise, you can do your trust receipt journal for the month of April, so on and so forth. So today's webinar was about, of course, one of the more important steps that you would do on a timely basis, on a monthly manner, generating those reconciliation documents. We spoke about the importance of these documents, the importance of the outcome of generating these documents, and we also took a simple example of how you can generate them with a legal accounting system such as uLaw, giving you hopefully that confidence that it isn't a, hopefully we've demystified the subcomponents or steps that are required to generate this document. Okay? So today's webinar, again, is accredited for 1 hour of CPD credits in the provinces of Ontario, New Brunswick, and British Columbia. And the title of today's webinar is, let me read it real clear for those who have that question, Trust and General Reconciliation Demystified. So kindly use that title to claim your 1 hour of CPD credits. And I thank everyone who's joined me today. Go Raptors, and I hope you all have a fantastic weekend. Thank you.